When people discuss Tesla stock's incredible price history and purchasing and selling influences over the past 5 years, one name comes up frequently: Cathie Wood. Cathie Wood is a specialist at predicting how Tesla stocks would go. Since Tesla became an initial public offering, or IPO, she has been a firm believer in the company and a bullish investor. But recently, Cathie Wood has been selling her Tesla stocks. Cathie Wood sold more than 33,000 of her Tesla shares through her firm ARK Investment. This is against what Cathie has been preaching. She recently predicted that Tesla's shares would rise to about $3,000, so why is she selling? What does this mean for bullish Tesla investors? Is she seeing something others aren't? Stay tuned to find out. Cathie Wood is the managing director of ARK Investment Management, a New York-based fund with a portfolio worth more than $41 billion at the end of the third quarter of 2021. Wood has built a reputation of investing in innovative, high-growth industries over the years. Cathie Wood's ARK ETFs have ditched additional Tesla stock in the new year and stocked up on Palantir and Teladoc shares as they strive to recover from a difficult 2021. As a result, we recognize many investors are curious why Cathie Wood sold her shares. Well, according to her trading newsletter, the star stock picker dumped more Tesla stock as it soared after the electric vehicle maker reported massive fourth quarter deliveries. The investment firm sold 39,262 shares worth about $45 million at the start of January, trading from 2 of ARK's ETFs. Though the electric vehicle manufacturer remains the biggest bet in the 3 of the company's funds, including the flagship ARK Innovation ETF, Wood's firm cashed in on millions of dollars worth of Tesla stock in 2021. Now, this appears to be a bit confusing. Wood previously predicted that Tesla shares would reach $3,000 apiece by 2025. The stock has risen about 57% in the last 12 months. Also, in the new year, ARK Invest ETFs have loaded up on shares of virtual health company Teladoc, which has fallen 56% in the last 12 months. On January 3rd, the firm purchased nearly 80,000 shares of the company. While we haven't received any explanation from any of the ARK Invest employees, in a December 2021 blog post, Woods stated that tech firms in ARK's portfolio, such as Teladoc, are in what she calls a deep value zone. That's all we've heard from ARK Invest so far in 2022. ARK also purchased shares of Palantir, the analytics company founded by Peter Thiel. In total, ARK purchased about 442,456 shares, worth about $8.2 million based on the opening price on January 3rd. In other notable New Year's trades, ARK purchased 345,771 shares of commission-free trading app Robinhood, and sold 359,577 shares of social media company Twitter. Could Cathie Wood be selling Tesla stock to diversify her investing portfolio? Wood rose to prominence in 2020 when her flagship fund produced 150% gains and acquired more than $17 billion in assets under management in the previous year. But the fund has since fallen by roughly 27%. Maybe Wood is trying to do things differently by selling Tesla shares to diversify her portfolio. We know that sometimes circumstances necessitate changes, and perhaps that's what Cathie Wood is doing. But this isn't the first time she's selling. ARK Invest's exchange-traded funds have been shedding Tesla stock since the beginning of September, when its shares began to rise, allowing Wood's fund to profit. Wood is known to sell Tesla stock when it outperforms for a set period of time, since not doing so would be poor portfolio management. ARK Invest has been profiting in Tesla since September 2021, selling over $3 billion worth of shares after years of piling up shares in the electric vehicle company at far lower levels. As you can see, Cathie Wood's ARK Invest has been at it for some time now. The sale didn't begin this year, and everything seems to point towards portfolio diversification. So, for example, back in November, ARK Invest sold Tesla shares to increase their stake in Zoom. Following the dismal performance of the video communications firm, the flagship ARK Innovation ETF sold $136 million of Tesla shares while purchasing $112 million of Zoom. In the ARK Next Generation Internet ETF, the fund sold $23 million of Tesla to buy $22 million of Zoom in October 2021. Cathie Wood ARK Invest offloaded a massive stake in Tesla, dumping more than $600 million in shares to instead splurge on struggling stocks like Coinbase and Robin, and doubling down on her staunchy bullish stance on disruptive technology despite growing skepticism on Wall Street. According to ARK's daily transaction records, the business fund sold another 381,000 shares of Tesla that month for a holding worth of around $297 million. Following a rush of Tesla purchases that year, the sales have been ongoing for quite some time. Wood stated that she loves to trade around stocks' volatility, buying when prices are low and selling when she feels prices will fall. Investors may be concerned about her latter comment because she does not expect Tesla's stock price will fall. Wood has maintained her belief that Tesla would reach the $3,000 mark by 2025. Tesla certainly did well in 2021, as it posted over 936,000 electric vehicle deliveries, and 2022 is expected to be even better. It's been a banner year for Tesla, from buying $1.5 billion worth of Bitcoin to the partnership with Hertz, which helped the company reach the $1 trillion market cap, then to navigating supply chain disruptions better than any of its peers, enabling solid delivery numbers. Musk sold billions of his shares in 2021. The automaker undoubtedly dominated headlines. Tesla CEO Elon Musk, who has sold more than $15 billion in company stock since early November, stated that he was nearly through with his stock transactions. The billionaire has made conflicting claims about whether or not he had completed his declared objective of selling 10% of his Tesla shares. On November 6, 2021, Musk stated that he would sell 10% of his stake if Twitter followers approved. Tesla's shares, which were approaching record highs, dropped almost a quarter of their value shortly after Elon Musk exercised his options, which were supposed to expire later this year to pay taxes. Musk, who relocated the company's headquarters from California to Texas in 2021, also criticized California over taxation and overregulation. Many analysts believe that 2022 will be favorable to Tesla, with the electric vehicle company's stock potentially rising nearly 30% thanks to increased China demand. Over the previous 6 months, Musk and Tesla have weathered chip supply issues better than any other car maker in the world, which is why Tesla is in a great position moving into 2022 with an inflection moment year ahead. The scenario is now set for electric cars to take a substantial step ahead in pushing customer acceptance in this green tidal wave, with many winners as a part of the auto industry's largest revolution since the 1950s. China is a major element in the Tesla bull thesis, accounting for 40% of deliveries for the electric vehicle manufacturer in 2022. It is the largest market for premium luxury automobiles, with quantities sold of the best models from Mercedes, BMW, Audi, Porsche, and others. In her firm's last report, Wood predicted that Tesla's electric car market share would decline when more electric vehicles entered the market. Nonetheless, Tesla's proportion of global electric car sales is maintaining consistent or increasing, providing ARK the confidence to be even more optimistic on Tesla. On the other hand, GM sales fell to 44,697 units in the third quarter of 2021, a reduction of 218,195 units from the previous year. We anticipate Tesla to prosper there. While the chip component scarcity continues to be a challenge for Tesla and other automakers, it is temporary. The second driver of Tesla's success in 2022 is the launch of the new gigafactories in Berlin and Austin, which will relieve global production constraints for Tesla by the end of 2022. As a result, Tesla is estimated to have an annual capacity of close to 2 million units. While supply chain concerns hampered Tesla's total unit growth in 2021, this dynamic is expected to improve dramatically in the future, with 1.4 to 1.5 million units potentially within reach yearly in 2022. Tesla also intends to expand to high-volume manufacture of those 4680 battery cells at gigafactories in Texas and Berlin. At the same time, the carmaker is still purchasing as many battery cells as it can from vendors. We believe that its cell manufacturing in 2022 will be the game changer. Tesla expects to expand by 50% over the coming years and may even exceed that figure in the next 2. This growth will be in volume and revenue, with margins continuously growing. Of course, you can never bet against Elon Musk. Tesla has various goods and initiatives in the works that can help with these objectives. Why do you think Cathie Wood is selling her Tesla shares? Comment down below.